I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. In this video, we're going to be going over the subconscious mind of the crypto market. What that means, we're going to look at what factors actually move the crypto market. Sort of like what we did in our last video with the stock market, looking at the 10-year Treasury, crude oil, and the US dollar. We're going to go over the things that move the crypto market. And just before we go over that, I want to give a little sentiment on how I feel about the crypto market, just so you see where I'm coming from. Cryptocurrencies, they're here to stay. They're not going anywhere. They're perfectly put in place for the fourth industrial revolution. It's needed for us to move into this digital world that they're pushing us into. So it's not a fad. It's not going nowhere. Bitcoin is not going to zero. That's the most ridiculous thing I've ever heard. I do hold a bunch of positions long term, and we have that long term outlook of that 3, 5, 10 years. 3, 5, 10 years, if you're in the right cryptos that have real use cases, you're going to be fine, even if there is a market crash, which I think there will be. But when holding these positions long term, like we stated before, you can't worry about that. You just have to endure the pain, take the hits, and just have confidence that long term you're going to be more than all right if you're in the right cryptos that will have real use cases and utility. But of course, I also feel that these markets will eventually get drained. I am a little cautious about adding to long-term positions at these price levels. When it comes to hodling, it really depends when you bought these assets. If you were buying assets when Bitcoin was at that $3,000 price, $5,000 price, $10,000 price, you're going to be more than fine. We're never going to see those levels again. But again, this channel is going to be more about trying to find that overall market direction. So no matter what your strategy is when it comes to the crypto market, whether you're hodling, swing trading, trying to get into positions, trying to get out of positions, you're going to see that this channel is going to provide you with a lot of relevant information where you could basically make wiser investment decisions when it comes to the crypto market, especially if you're not very familiar with the crypto market. But let's get right into it. So these are the things that we're going to go over that moves the crypto market. Stablecoins, specifically Tether and USDC, significant news, volume, grayscale, CME and back futures contracts, and that 10-year Treasury, which you know we love on this channel. So let's first look at Tether. What Tether is, it's a stable coin. You could do your own research if you want to know more about Tether. Tether, in my opinion, is one of the most ridiculous financial instruments there is. It's basically a fugazi. There's nothing backing it. At least a dollar, it's something physical. Tether is a digital nothing that's backed by nothing. It's crazy that Tether even exists. But what we're looking for are Tether pumps. When Tether is pumping, that's usually when we're in a bullish market. When Tether is not pumping or even declining, that usually means we're in a bearish environment. So let's take a look at what Tether has done in the past. First, let's pull up the price of Bitcoin. What we're going to do is we'll take a look at what Bitcoin was doing on the beginning of this year, January 1st, 2021. So let's pull up that chart real quick. So January 1st, 2021, we were about at 32,000. And as you could see, at the end of the month, we were at about 33,000. Not much of a price movement over there. But let's take a look at what Tether was doing during that month of January. So we'll pull the data up. So Tether at the beginning of January was about 21 billion. Throughout that whole month, you could see what it was doing on a day-to-day basis. At the end of the month, we landed to about 26 billion. About a 5 billion increase, not bad. It would explain why the prices were stable, even up a little bit. But now let's go to the month of February. So we'll go to February 1st, 2021. We could see that the price of Bitcoin was at about 35,000. And at the end of the month, February 28th, we went all the way up to 49,000. Now let's take a look at what Tether did for that month of February. We left off on that $26 billion mark, and you could see it just steadily increasing throughout the month. As we go up, you'll see it go from 30 to 31 to 32 to 33, so on and so forth, until we get to the end of February where we land at 35 billion. That's a $9 billion increase. So you see the more pumps in Tether enables the price of Bitcoin to go up more easily and therefore bring up all the altcoins along with it. And now take a look at what happened in the month of March. We're going to go from March to the middle of April on this one. March 1st, 2021, you could see the price of Bitcoin was at about 48,000. Now we'll go all the way to the peak of April 14, 2021, where you'll see the price of Bitcoin at 63,000. Now let's see how much Tether pumped during that time period. We left off at 35 billion. So we'll scroll up. You'll see we at 36, 37, 38. We do get stuck at some levels, but you see for this time period, it just keeps going up pretty effortlessly. And we'll go all the way up to April 15th, where we hit 46 billion market cap. That's an increase of 10 billion from March 1st to April 14th. So you see with $9 to $10 billion pumps, it's really able to push this price of Bitcoin up, and of course that overall brings the rest of the market up. Let's take a look at what happened to Bitcoin after that April 14th date. So we'll look at April 16, 2021. The price of Bitcoin was around 60,000. And let's take a look at July 19th. That's the low where Bitcoin was around that 29,000 range. So you might be asking, what did Tether do during that time period? Well, let's pull that up. Tether, we left off at the 48 billion mark on April 17th. So if we scroll up, you'll see that it's going up a little bit. 49, stays at 50 billion for a little bit, hits 52, 53, 54. What I really want you guys to see, let's continue scrolling up, is when we get to the end of May, where it starts hitting that $60 billion mark, you see it really struggling from 60 to 61. We eventually hit 62, but look at what happens when it hits 62 on June 4th. If we keep scrolling up, you'll see that it stays at 62 for quite a while. So when you see something like this, that's indicating that we're in a bad market. You're not really going to see any big price movement. The price is probably going to go down. So that's what Tether could show us. And we're also going to look at USDC and Binance USD because they could pump on those too. So we just got to be aware and look at the top 3 stable coins according to market cap to see what the stable coins are doing. So the next thing we need to look at is any type of significant news. A perfect example of significant news is, we'll pull up this article, JP Morgan to give all wealth clients access to crypto funds. Now what's interesting, let's take a look at the date on that. It's July 22nd. Now let's read the actual article. It says, the bank told its financial advisors in a memo earlier this week to take buy and sell orders from its wealth management clients for 5 cryptocurrency products effective, what date is that? July 19th. They're not even trying to hide stuff from us. What was on July 19th? It was the low point of Bitcoin at that 29,000 mark. Now let's pull up a more recent article. Morgan Stanley funds have picked up over 1 million shares in Grayscale Bitcoin Trust. And what date did they start buying? Back in June when Bitcoin was around 30,000. Them too got in at the low point when everybody else was probably panic selling. But this doesn't come as a surprise because JP Morgan helped set up the Federal Reserve back in 1913, and Morgan Stanley was created by the same JP Morgan family. That's why it's both Morgan in their names. JP Morgan, Morgan Stanley. And it's the Federal Reserve that's pumping and dumping this crypto market. Retail money by itself, it wouldn't be able to bring prices of Bitcoin and any of these altcoins to some of the levels that we're seeing. You have to understand, we showed this before, the Federal Reserve printed out 20% of our total money supply within the past year. So this money had to go somewhere. That's why you're seeing things like Dogecoin and other coins that don't make sense. Not to say they're growing anywhere either, but that's why you're seeing some of these coins go to these crazy levels. It's because the Federal Reserve needs to put that money somewhere, so they call upon their buddies to help move this money around. And it's already in the crypto space, which most people don't understand or have no idea what's going on, which is why they're able to get away with it, because again, the masses are asleep. In the future, I'm going to try to put together a video that goes over the total crypto market manipulation done by the Federal Reserve and different other financial entities. This video, I do want to keep it to just what's actually moving the market. And it's news like that anytime Morgan Stanley or JP Morgan gets involved in the crypto space. Even though their CEO, JP Morgan CEO, was saying the crypto is no good, this and that. Don't follow what these people say, follow what they do. We're going to continue to try to follow the money. The third thing we're going to look at is volume. This is pretty self-explanatory. We could go to the same website we're pulling up all this other stuff, CoinMarketCap. At the top, you'll see over here what the 24-hour volume is. For any moves up and for even moves down, you typically need increase in volume. So it's just good to look at this every day to see what the volume's at, if it's increasing or decreasing. And it could give us a better indication on whether we're going to get big price movements either up or down. Now, the next factor we're going to go to is Grayscale, who's the world's largest digital currency asset manager. So they're the biggest whale known to us. We need to recognize whether they're buying assets or selling assets. How do we do that? Very simple. We could just go to their Twitter account. They post every day an updated AUM, assets under management, to see whether they're selling or buying assets. So if we even go back to August 5th, you see that they had 35.8 billion assets under management. Now, if we go all the way to August 25th, you see that number is now at 43.2 billion. That's a $7.4 billion in purchases that they now have under management. So we could see that it was Grayscale for the month of August that pushed these Bitcoin prices higher, because Tether wasn't really doing much, but that's why we look at both. We look at Tether and the other stable coins along with Grayscale, so we could see who's pumping these markets and if these markets are actually being pumped. The next piece of information that we look for as to what moves the crypto markets are the future contracts, the CME and BACK. CME, it's always the last Friday of the month. BACK, it's always, I believe it's the second Thursday of each month. Usually around these times is when we see big pullbacks when it comes to the crypto market. I can't fully explain it. I just know there's a lot of price manipulation going on when these contracts come to expire. People are trying to move the prices up, most likely down. If they sold calls, they have to push the price down. So those contracts expire, worthless, and they get to keep the premium. So always the last Friday of the month and the second Thursday of each month. And we'll pull these contracts up every time we do a market update, just to remind us, is usually when we could expect to see a pullback. So if we're coming to the last Friday of the month or that mid-Thursday of the month, and we're not seeing any pumps from Tether, Grayscale isn't buying anything, there's nothing going on with the news, we could take that as we're probably going to take a hit in these markets. You could see even this week, we did have a slight pullback from 49 to about 46,000 until we started moving back up as we went into the weekend. A lot of times, because the market is closed, everybody flocks to the crypto market over the weekend, which can push the price higher. But usually at the end of the month, that is when we receive a pullback before we start moving up again at the beginning of the month. Reason being is at the beginning of the month for the new contracts, Bitcoin is needed as collateral, and that usually causes a lot of buying pressure. So the beginning of the month is usually when we see pushes up in the crypto market. And the last thing that we look at and monitor is that 10-year Treasury yield that we love on this channel. It's the same thing as stocks. If that Treasury yield spikes, it's going to hit both the stock market and the crypto market, in my opinion, even harder. Reason being is there's about 10,000 coins out there, most of which have no real use cases and are not going to be used by any type of major banks. So 99% of these coins are just going to disappear when it's all said and done and there's regulation put in. But even that 1% that are going to survive, while the rest of these coins are just disappearing, they're going to take a hit as well before they rise back up again. But that's that long-term outlook that we need to have if we're hodling. So just to do a little recap, these are the things that move the crypto market and what we're going to look at going forward in market recap videos. stable coins, including Tether and USDC, any significant news, volume, grayscale, CME and back futures contracts, and that 10-year treasury. This channel is not going to be about a bunch of hype saying buy all the cryptos you can and you're going to be rich in a month. One, it doesn't work like that. There are altcoins that can pop off like that and make you rich overnight. I don't know those. There are better channels that have information to that anyway. We're just going to focus on the main things that drive this crypto market so we can make better long-term and even short-term investment decisions. When you know the overall direction of the market, it does just make everything easier. And that's what this channel is here for, to give you an overall direction of where the market is heading by looking at what actually moves these markets. So if you like what you hear, continue to tune in. Thank you for the view right now. Smash Hulk that like button, share the videos, subscribe, and let me leave you off with this. As always, the God of Abraham, the God of the Bible, the Father of our Lord and Savior Jesus Christ is real, and may He bless you.
One example, Uber, Bitcoin, self-driving cars. Combine those three together and you have the self-owning taxi. A car that is a corporation that owns itself, pays for the car lease, the car insurance, and the gasoline from the revenues it makes, giving passengers a ride, and there's not a single human involved in that management.